Welcome, everyone. Thank you for joining us. We are here live through Floify and our presenters. Welcome to the webinar, Unique Strategies to Grow Your Mortgage Business in Any Market Environment. My name is Sophia Rosado. I am President and GM of Floify, and I am so pleased to have this webinar. We actually got quite a number of attendees and interests for this webinar because of what's happening in the market. So if we think about it, there's the decreasing velocity of home sales. There's the refis down 70% year over year. There's decrease in inventory, supply chain issues, you name it. So there's a lot going on in the market that is putting pressure, and of course at the top is rising interest rates. It's putting pressure on the industry. So what we thought we would do is bring some of the most creative and unique thinkers in the industry from both the production side and the processing side to talk a little bit about what are they doing in this market and in the business to help make sure that their businesses are here for the long term and can not only survive but thrive through these market ups and downs. So we'll walk through and do a quick welcome about Floify. Very quickly, we are one of the top digital mortgage automation and point of sale software providers. We have dozens of integrations, great partnerships. If you want more information, we'll have that at the end of the slide. We also just have two quick offers to let you know about: 14 months of Floify for the price of 12 for an annual subscription. And we're also offering 15-minute one-on-one strategy sessions with a point of sale expert. If you are interested in either of those offers, please go to floify.com/growth. Now let's turn it over to the introductions. This webinar will also be recorded, so no need to take notes. You'll have the recording in your email right after the webinar. First, I would like to welcome James. And James Pulsifer has been a loan officer for nearly 30 years. Prior experience in processing and underwriting, James has built a purchase-focused business platform that's entirely relationship and referral-driven. He's got some of the most unique ways of thinking about referrals and relationship and setting up your systems in that way. Knowing that the key to success is in building a quality team and excellent system, James consistently ranks in the top 1% of originators nationwide and is approaching $2 billion in career production. His hands-on approach in mortgage lending has helped contribute to his record 99% approvals. Welcome, James.
Hey guys, glad to be here.
We also have John Norris from Benchmark Mortgage. John has been in the mortgage industry for over 25 years and has extensive experience in some of the top lending institutions in the US. John's been instrumental in developing and implementing innovative solutions that improve loan origination processes between loan originators and borrowers. Welcome, John.
Thank you.
We also have two guests and presenters from Legacy Mutual Mortgage. First is Raven Johnson. Raven is a business systems expert with a background in loan origination. Her current role is Vice President of Business Systems, but her wide range of past roles in the mortgage industry has shaped her into the unicorn she is today. And that includes experience being a processor, originator, closer, funder, project manager, business systems leader, you name it. Business systems is where she thrives. Welcome, Raven.
Thank you.
And finally, Nick, last but not least. Nick Pronsky has extensive knowledge and understanding of the mortgage industry after spending time in underwriting, processing, and origination, both in wholesale and retail. Nick really found his calling when he moved to Austin and became a full-time loan originator, where his knowledge of mortgage underwriting guidelines and his commitment to providing excellent customer service helped him grow and his business through a trusted network of referral sources. Welcome, Nick. All right. So let's get to the panel discussion. Given everything that's going on in the market, the first topic for us to discuss is how have you future-proofed your business to prepare for both macro market ups and downs? And I think I'll send this first one over to James. So James, we can get started with you.
Yeah, the one thing that we know about our industry and real estate in general is that it's going to cycle. And so we want to be prepared for those cycles, definitely. One thing that we've done to future-proof the business is to use systems and create an experience that's different for the consumer. In the past couple of years, just being there and being available has gotten the business. And so what you've got to start to do is look at what's really driving the business and what makes your process and your functions unique and different. And truly having a unique value proposition is going to become more and more important. And there's lots of levels to that. But you've got to look also at multiple channels for business and determine, when and how to leverage those relationships in doing things in the marketplace that others aren't doing.
That's great. And do you have an example, James, of when it comes to, say, a business workflow or a business process that you think is unique and helps you future-proof during these ups and downs?
Definitely. And Floify is a big part of that. I think one of the things, and this may be a little off topic, but good to bring up, I think once we see slowdowns, people tend to rely a little bit less on automation and process because they have the time. You rely on the automation as a time saver when you don't have time. And I think reinserting yourself into a manual process is the biggest mistake that you can make, because relying on that automation and refining those workflows becomes important. And then you've got to use that downtime to find those places to develop relationships in business. A big part of it is just consistency. When we see business slowdowns, people change their habits, and whether that is how they're executing the loan from A to B or how they're out there marketing. Nothing a referral partner hates, worse than desperation. And so when business is suffering, I find that people get out there and they do the wrong things, and it smacks of desperation, and it comes off that way to the consumer and the partner as well. And so, being able to do that and finding things that are adding, new and different value is really the answer. So as simple as it sounds, consistency is really the key to the beating the cycle, in my opinion.
Yeah, great point. Nick, anything to add?
It's exactly what he said, is consistency. I think it's really important to make sure that you're diversifying where you're getting your business from and during these cycles. I imagine there's a lot of financial advisors getting more phone calls today than realtors. And so making sure you're in touch with people like that, divorce attorneys, there's all kinds of other referral partners to focus on, most notably the database. So finding ways to make sure that you're constantly reaching out to different referral sources to make sure that you have a steady stream of referrals coming in, even when the purchase market slows down a little.
That's great. And thank you. That's two great points of view from the production side. What about the processing side? Raven, any thoughts around when you think about margins being compressed and having to do more with less? What ways has Legacy Mortgage future-proofed their business to prepare for this macro change?
I think that, from the sales side, they're saying consistency is key. From the business systems technology side, I think that it's more powerful, more important to be ever changing. So we are just always looking for ways to be better and more efficient, never sitting still, never getting comfortable, always listening to our people, listening to our internal people, our loan officers, our operations people, listening to our customers, not just taking their feedback for granted. And that's where you have the real opportunity to take advantage of the downtime, so to speak, where you can clean up and analyze and tweak and improve your processes. And you have the time to do that. And it really starts with your data. We have a really powerful BI platform, and that gives us some really powerful insight. And that's key in determining what directions we need to take and where we need to improve. And then having the end analysis to be able to determine the success of the changes.
That's great. And John, anything to add on this first question? Oh, we can't hear you.
Oh no, we lost you.
There we go. Sorry, I muted it. So there we go. Yeah, I would say not much to add other than, think kind of add on to what Raven said is to, we ask why a lot, right? Why are you doing these things? Why are those things? When you're in this mode of finding opportunities or process improvement, it's real easy. People I've always done it that way, right? That's always a key indicator that there's probably a better way if someone's always done it that way. That means it's probably stagnant or dated, and a prime opportunity for improvement.
And I think across all of those themes, the idea of just being able to change faster than your competition is really key, because if you're in a changing market, what's not going to happen is your results aren't going to improve if you don't change too. So whether that's process driven or origination driven, you've got to look at that and how do you change? You know, you face market compression, and on the process side, you know, people like Raven have to figure out, you know, do I need less people, which is not the answer anybody wants to hear, or can I do more loans with the same number of people because you're facing that compression? And so being able to adapt and find those changes and do it faster than your competition around you is really the key to staying ahead of it and being seen as an innovator in the business and a resource versus somebody who's sort of following suit with what everybody else is doing. So be the first to the dance. I mean, we've seen in the last 3 or 4 weeks the total paradigm shift. You know, we've seen it go from sellers, you know, saying take a number, wait in line, to what can I do to get my house sold? And if the market can move that quickly, then so should the way you think and the way that you're responding to it, because you've got to meet the need faster than your competition or you're going to lose.
That is a perfect layup to the next topic. And before that, to the poll. I'm going to share a poll with the audience. Feel free to take this. We've actually made it public, so whoever votes you can see the total votes coming in. And it's a little poll around, given the market turbulence, what do you see as being the most important to securing your business during this time? Now, note, this is not growing your business, it's securing your business during this time. So we will ask a second poll as we keep going. All right, on to the next topic. What role does innovation play in your business during a market shift? And more specifically, here's a little creative question for you guys and gals. What innovation surprised you because it had a bigger than expected positive impact on your business? I'll give you an example from one of our sister companies. Our parent company is Porch. One of our sister companies, ISN and Guardian, they just issued a very new feature called Pay at Close for inspectors. It allows inspectors to roll their inspection cost into the closing, just like you would with an appraisal. And this has been way more impactful and positive because it helps you close loans faster, and it helps the inspectors increase their prices because they can add more into per transaction, even though total transaction volume might be down in this market. So that's an example of how innovation has kind of surprised a positive business impact even during a difficult time. Any examples of that in your own businesses or things that you're thinking about? And I'll just leave it open to the team, whoever would like to answer first.
I'll take it. So the big keyword, the big buzzword right now is bots, right? Bots, automation, RPA. But you know, maybe that doesn't work for you. I've found that it really doesn't work for us, quite honestly. I think Legacy Mutual does so many things differently every time. I'm not sure if we have really anything that we do the same way every time. And that's really important when you're looking at most automation. So some things that have really surprised me are the small things, the small plugins or the utilities, which again are purchasable technology. But those are things that have combated small tasks that are done frequently. Maybe they are done the same way, but they've taken processes that have normally taken 5 to 7 minutes and taken them down to seconds. And that's huge. You know, you don't want to get rid of people. You don't want to say, oh, this, you know, cuts 7 minutes off per loan file. That means, you know, that comes down to this much per minute. And now we can get rid of 2 people. You know, no one ever wants to go in thinking you're getting rid of people. You know, now we can do more loans faster. We can get loans purchased faster because we can get these final docs scanned in faster. And now we're not costing as much money on the warehouse line or suspenses, you know, whatever the case may be. It's been the really small things that we can tackle, the everyday tasks that really, really add up.
Great answer. Yeah. Everyone thinks automation is end all be all, but you know, it's about the margins and how can you make 1 inch at a time improvements. All of those add up. Great
And
point.
from a team coaching standpoint, Raven, you hit on something that's really, really paramount. If you can really get your team to believe that innovation doesn't mean elimination, then they'll embrace it a lot different. I think that a lot of people across different organizations really fight some innovation because they do think it's trying to eliminate their job. And, I think those of us who have been in the business for a long time remember when they first introduced DU and it was going to replace the loan officer. And what are we going to do now? And, if you look back at some of those things, the more you embrace that innovation, the more opportunity that it gives you. And if people can get behind that, it's back to what I said, the secret in a shrinking market is to be able to do more business with, the same amount of people. And that's the answer to kind of beating the curve and what the market's doing. So don't underestimate that, and how you push that back to your people is critical.
Fantastic. Anything else to add, Nick or John?
Yeah, I would say that the specific instance that comes to mind for me actually has to do with Floify. So back when I was first getting started, I was always big on communication. Still am, obviously. It's one of those things where I noticed that a lot of lenders don't communicate very well during the transaction. And so I had these templates set up where I would manually send out emails to the buyers and listing agent. And sometimes it got done, sometimes it didn't. And then we stumbled across the Floify platform where you can do those automated status updates where it's a click of a button and an email goes out to the buyer's agent, the listing agent, the title company, transaction coordinators, escrow officers, you name it. And now it's like clockwork. 10 different emails go out on every file we have from contract to funding, and people are blown away by the communication of it. And it's actually just the thing that surprised me from it was how many opportunities it created to meet listing agents that were impressed with your communication and to really get I always like telling people I did 3 purchase loans for escrow officers at different title companies last year. And I owe that all to that. They're like, no one keeps title in the loop. You're the only one who ever emails us. And so that ended up being 3 purchase transactions just from escrow officers who were impressed with that communication.
Fantastic.
My team handles all of the timing of when each button's pressed and when those updates.
Well, and don't forget the way the system communicates. The consumer doesn't know that you're not the one sitting there typing that email. Make sure that your templates and your scripts are authentic and they don't seem formatted, and then they're not going to know it's any different. If they reply to that automation, you get that response. I think so many people stop and they manage based on their perception, and they think if I'm not pushing the button, then I'm not earning my keep. And you've got to manage from the perception of the consumer, people receiving that, and that's huge. I agree 100%.
That's fantastic. That's really key in driving customer experience and having it feel like it's coming from someone, because it is. You're reviewing those templates before they go out. All right. John, anything else to add?
Yeah, I do. I want to touch on the bots a little bit. One of the things I was historically against bots until recently. As you start breaking down these activities or tasks, and it's going to depend on your loan origination system, but what we're finding, if you look at what the time on task of a person doing a function like sending disclosures out, and you look at how much value, look at the time spent watching the screen do something while they're trying to accomplish the goal. There's minutes, seconds there that you can recapture. And the knowledge worker activity is getting the loan ready to disclose, not the function of getting the output out the door, right? And then in someone's inbox or in the Floify for disclosures, for example. So that's what we're looking at, is those types of activities, like still do your work, right? But when it's time for it to be the routine piece, automate that. And that adds up to quite a bit. I did some math a couple of years ago on the intent to proceed checkbox in Encompass, if you're familiar with that one. It was a 6-figure number for us, at half the size we were. It's probably even bigger than that, just in the labor to click a button. I mean, it was hundreds of thousands of dollars collectively across the company. And that's the first one we're going to automate, is to take away that, human having to check that box. It's on the doc, it's signed. We know all the information, just automate it, right? So that's one. The other thing for us on the innovation side with Floify, and we use Encompass, is what recent release, I guess probably 6 months ago or so, where we can pull in custom fields from Encompass data, right? So we take the field ID from Encompass and link that, and you can display it on the screen like as attributes. That saves time. I'm in the loan. An LO, LOA is going to be working in Floify often more than Encompass. saves me a trip. When does my rate lock expire? What's the rate? All those things can be, more at your fingertips than having to go and Encompass and do that, which, Floify is a little faster. Plus it's support on more devices, right? And then you can take those fields and drive business rules from the request. So you can actually take activities and events inside of Encompass, even custom fields, and drive events, change the layout, look at the screen. So this, that to me, that's very innovative to be able to kind of orchestrate the loan process across two disparate systems now. That one feature is really opening up the door to do a lot more things. And we're just scratching the surface on that one.
That is the truth around scratching the surface. We'll talk more about those the customization opportunities there. And while we're out, I'm going to load up another poll. This is the second poll for the audience. Here we go. So this poll is, given the market turbulence, what do you see as being the most important into growing your business? Not securing your business, but now growing your business during this time. And feel free to answer, and we'll leave those answers public. The next topic 3, is what types of partners and channels are helping drive business success in this market in particular? I think, Nick, you touched on this a bit, which was a unique way to think about it, reaching out to divorce attorneys and financial advisors. Has these channels changed over the last 12 or 6 months, given what's going on in the market? Can you tell us a little bit more about what your thoughts are around partnerships and referral ecosystems?
Yeah, I mean, it's definitely changed a lot. We're still, a majority of our business still comes from realtors, but we've definitely diversified a lot to where each year we're growing the amount of referrals that come from our database and from financial advisors. And that's by design. I mean, we really do make a point to reach out to financial advisors often and meet different ones and talk through strategies of, we have a lot of cool software that we use that educate clients on perhaps the ability to maybe put less down on a house and use that additional money to pay off debts or invest in the market. And financial advisors like that. They want clients that are aware of that and want to leverage lower mortgage rates or more advantageous rates like that to where they can invest more money. And so those kind of relationships help a lot. And it's really helped a lot lately because people are panicking. The stock market continues to go down and people are, they want to know where to put their money. And that's a line we use a lot with both realtors and clients. The ultimate hedge against inflation is home ownership. Mm-hmm. So I mean, there really is in an inflationary environment like we're seeing right now. It's, you hold your money in cash, you're going to lose it to inflation. You put in the stock or bond market, it's probably not going to do well right now. Crypto, we're all seeing how that's going. And so beyond that, I mean, homeownership has a historical track record of outperforming inflation, and rents will continue to go up, especially when you see these tax bills start coming out at much higher values this fall. So all of that kind of plays into being at the right place at the right time to where those people are getting calls and they need to refer out to a loan officer to talk about a home equity line of credit, a cash out refinance, purchasing, downsizing, all those kinds of things.
Fantastic. Yeah, James, anything to add to that?
Yeah, I definitely agree with everything he's saying. I think that the key is to start looking where nobody else is. When things slow down and people need business, they go out, and they call in the traditional resources. And that's not to undervalue, the traditional realtor-based referral, but going back to what he's saying, look in different places, financial advisors, divorce attorneys. I think a lot of people miss an opportunity with their own sphere of influence. They don't have their, peer group in their database. Your database is, the key to, to success, because most of the people in your database aren't getting approached by somebody else. You're approaching a real estate agent. You're probably one of 15 loan officers calling on them. Put yourself in their chair. What are you going to say that's going to add value? And even if you're making those calls, make sure that you're giving them something different than the competition, but don't go to the place that everybody's going for loans. Go to the places where you might be the only one there, or you're a smaller group of people there. What you say is going to mean more. I think going back to what Nick is saying, educating the consumer is paramount, because we've crossed the line from, here's a loan that anyone can execute, to how to really create a financial strategy. And that's going to become more and more important, and looking at the diversity of assets and what their real long-term plan is, versus the last 2 years mentality of lowest, longest term fixed rate. that's going to change. And so getting back in the discussion of how to leverage assets and really become part of that whole, life financial strategy is going to become critical. And that's where you can earn your value over your competition.
And a quick follow-up question for you on that. The other day, we were talking a little bit about what we're seeing, and speaking about people's ability to buy homes in this market, which is becoming more and more compressed with the influx of institutional all cash buyers. What are some of your thoughts? This kind of goes back to the second topic, but it triggered my thinking around it, just around rate locks in general, and your thoughts around all cash institutional buyers.
I think the easiest way to combat the all cash situation is, just in how you present the quality of your offer and your situation. And this is where using innovation and your process can really, help. There's several different approaches. There are some third-party companies. I'm not a huge fan of that put your buyer in a cash situation. Of course, the cost of that is pretty intense. But either doing guarantees or, coming in with a track record of success, because this is where you can come in with an offer and let them know not all lenders are created equal. And here's how we're different and why you should look at our offer as a cash offer. Some of the things that we've done, even just in a competitive marketplace. But, I think that those things are just going to become, more and more critical as you look to edge the competition. I think it's going to be interesting to see the paradigm shift, in that whole cash position and some of those players that are coming into the market, whether it's venture capital, or other players, as we do see the market dynamic move. So that's going to be something to really keep a close eye on, because I do think we're going to see a shift in, how do we coach our buyers to beat cash versus how do we coach our sellers to attract a buyer. And I think that in the next 6 to 8 months, there's value there. And of course, on either side of that, there's a sales opportunity, because, your buyers, except first-time home buyers, are sellers at one point. So if you can pitch the value of being a buyer versus a seller, then they're going to pick up the flip side of that. And again, that's where then they rely on your education, your experience, and your resource to bring them around to that in the most productive way. And incidentally, that's where you then gain value with the people who probably don't always want to talk to you. Realtors you don't know. The listing agent on the other side is like, gosh, I've never seen that approach. Going back to what Nick says, and then, that's that secondary opportunity to have a quality conversation instead of a sales call.
Great. All around providing value, right? That's the best kind of sales, is you're in service of whoever your customer is. So that's a great answer. Raven, John, anything to add around channels and partnerships? Any thoughts on that side? As I know that there's opportunities there for integrations, other things. Have you seen anything work better than other channels from an integration or automation system standpoint when it comes to channels, lead generation, partnerships?
John, you want to take that one?
Sure, thanks. No, it's kind of something Nick said a couple times here. We've seen, it was early on when we went Floify when the milestone sync with Encompass all started coming out. We were actually, some of the initial feedback we got was that the listing agents were being included in the updates, right? And that's not traditional in our branches. We're doing that. And they were like, we don't get this from our own referral partners. And they were kind of started, converting them to partners to us. So that was probably kind of kind of tying into some Floify features, being able to do those milestone updates and communicate them out to all the parties on the loan, not just the referral partner, referral agent. Does help drive some additional business, our way.
I didn't think about that one. That's a good use case. Thank you. Okay, and the last question before we turn it over to audience Q&A was just, how do you think about mortgage technology broadly to grow your business in any kind of environment? And also, why did you choose Floify as your point of sale solution? And I think, in this next, we have 2 slides that include a case study. And John, I'll start with you. If you could walk through, we don't have to read through all of this, the audience can read through what's in here, but at a high level, if you could just talk about what you were looking to accomplish when you thought about adding a POS system and mortgage automation, and what were some of those results from it?
Sure. It was one of those things we didn't really know we needed it when we needed it. it kind of came about as us shifting from a homegrown, home-built, supported loan origination system to Encompass, and evolution in the industry anyway, just getting the borrower more involved in the process and being easier to do business with. Right, that's a key piece for the consumer through the process. So we started looking at, hey, there's a need here for us to have a portal that is easy to use for the borrower, and does it through a secure way, right? So, it's anybody can fire up an email and send a list to the borrower and say, give me these documents, but that's not really secure. You kind of lose control, and it's, makes your exchange admins unhappy too when your inboxes are full of customer docs and attachments. Anyway, so we started looking at products, what was available in the market. There was, quite a few that have been around for a few years, like Floify being one of them. And we kind of narrowed it down to a short list, did a pilot with Floify, and the results were really great, because there's a couple of things that were real important to us. We have a very distributed retail model, so like James can define his process the way he wants and staff it and make the roles and responsibilities of the team work a certain way for the way he wants in his market, and our other branches can do the same thing. So we didn't want a system that was very controlling from a top down process, right? And so Floify gave us that ability, that kind of ambiguity down in each team to process things that to use the system and features the way they want it. The other key feature for us was, or key decision-making factor, was that we didn't want a penalty for success. We were approaching this as an opt-in solution, right? We weren't going to force this upon anybody. It's like the benefit should be obvious. Everybody should want to do it, but we didn't want to force this in this distributed retail model. So there's different models out there, but a per user model versus a per loan model is much more attractive. And so we refer to those other ones as kind of a penalty for success, because you're implementing a solution to help grow your business and do things at a higher margin, but every loan you do costs you versus a fixed monthly fee, right? It gets cheaper every month the more you grow, right? It's more attractive. So that was important. That's one of the other reasons Floify made the cut there, and it was great. The pilot participants were super engaged in the process. We had to pick, we made sure we picked branches that were good operators. They had to have good processes to start with, right? You can't just automate, throw technology at a process and expect it to work. You have to work together and find out where the opportunities are to leverage the technology the right ways in their process without totally, having to force them to change things. You had to all kind of orchestrate that the right way. So that was kind of the big pieces of or at least the big aspects of what we're trying to do. You see there's some of the results there. Like we did some checkpoints, before Floify, after Floify, and as we were doing this kind of opt-in rollout, we had at the same time in the same timeline comparisons. We had branches not using it, branches using it, so we could get some timelines, and we were getting those on Floify were getting clear to close 7.5 days faster. So basically taking a week out of the process, and that's pretty obvious to where that comes from. It's the automation efficiency of requesting the stuff, if what you need from the borrower earlier in the process, making it easy for them to send it to you, upload it and send it to you, review it, resolve any issues that they might have, and get it into the system for people to for the team to use and consume. So that was the highlight of where we how we got here.
Fantastic. Thanks, John. Yeah, I didn't think about that until just now around, you can't just start using software and create a process on the fly. You got to be thoughtful around how you design your process. And that kind of goes back to some of the things James was saying earlier as well.
Yeah, also kind of touched on something earlier was we want to be very careful about not feeling like a transaction, right? Like James said, make sure your voice and your things are personal, all the emails and communication, because that's where the automation, that's where the benefit's coming from, but you don't want it to be received that way. Mm-hmm. So that's where being able to have templates, for email and text at the individual level, like by LO team, really makes it personal. And then you can add personal notes and things in those, really makes a difference.
That's great, right? It's not human or machine, it's human and machine together can coexist. All right, so let's go to the next the same question for you, Raven, in your case study in terms of how you think about mortgage automation software and why you chose Floify.
It's been a really long time since we chose Floify. We were introduced to Floify, and it was, at the time, it was a way to have secure documents provided by outside of our LOS, which was a super painful process for our customers. So we, of course, wanted to be secure, and we signed up with Floify. And, you know, I have to admit that I was a naysayer at the time because I was a processing manager and our processors already had so many systems to work in. I was like, okay, you're going to give them another system to work in, another place to go to be separate from everything. But quite honestly, it ended up being really great. And this was before Floify even had, you know, an online loan application. But that was one of the things that we really liked about Floify, is that they were able to really quickly advance and change and add features and listen to us as a partner. I mean, I love that they have, you know, the advisory council. We can jump on there, and if we have an idea, we can Slack it to the council, and we can, you know, have a meeting and propose ideas, and those ideas get implemented, and they get implemented really quickly. So that was one of the main features, main reasons that we partnered with Floify. Like John said, the customization is just key for us because, yeah, Floify was one of the only people in the POS space back then. And that's pretty much why we chose them, because there was very limited options. But we have stayed with Floify, and we've actually used other competitors as well recently, which did not work out, which we did not proceed with. But we have stayed with Floify because it really fits our model, like John said about the customization. There's nobody else has the customization or the access to the customization. You know, I can go in and I can change anything for the team. If the team knows what they're doing, the team can go in there and change it themselves. You know, we can have a brand new green LO and we just give them, like, you know, a little simple out of the box setting configuration, or we can have a really high producing loan officer who brings on a junior LO, and we can clone it to look exactly like that loan officer who's going to train this new loan officer on their team. Fully customizable, you can have the milestones Nick mentioned. I basically I set up a call with anybody who wants to configure anything with Floify, because I want to know exactly what they want. You know, do you want the milestones automated? You don't want to have to think about it, or do you want to hit the button and be in control of that every time? What do you want them to say? Which ones do you want? You know, also automatic doc requests. Gotta love when those were added, and those, again, customizable. If I have a loan officer who does nothing but FHA loans, government loans, I can set specific documents to be requested from the borrower with that in mind. Or if I have somebody who does nothing but conventional business or nothing but jumbo business, I can set the automatic doc requests with that in mind. You know, customize out the loan application. It's the level of customization and the control and access to that customization that has really kept us with Floify, along with them being a true partner, and along with the level of support and innovation and ability to change quickly.
Great. Thank you so much. I appreciate that, Raven. James and Nick, is there anything from your side of the house, of the business, when you think about, you know, when you think about software as it relates to mortgage software, how does that help you guys drive more business?
For me, I mean, I really think it's mostly about getting back time, giving us more time to focus on prospecting and the things that we need to be doing and spend more time with clients. So I'm always looking for anything like that. And it also goes back to that work-life balance. Like when you guys rolled out the realtors being able to request pre-approval letters, like giving them permission to request a pre-approval letter on demand. Oh, my nights and weekends got significantly better, just because now at every pre-approval, we send that invitation out to the realtor. I still get notified when the pre-approval is requested, so I can look up the address and call the listing agent. But for the most part, it's so much less activity to be working to send pre-approval letters out at weird times, which is sometimes necessary in this business. So there's that. I mean, I love how you guys have created the co-pilot where we can go into a live loan application and help a client complete it if maybe they're having some issues or skipped over a field or anything like that. So there's always a lot of different ways the software just gets better and better and allows us to do our job more efficiently.
Yeah.
Great, thank you.
Definitely true. I mean, I would think, and the assumption that most people on this call are users of Floify, we obviously have a shared belief in the system. I think in looking across different users, both within my group and other companies and peers that I look at, I think one of the things that this does is it really allows you to kind of bookend your unique value proposition. You look at it and, if you're going to pitch a real estate agent as an example, you can tell them the same things. We're going to communicate, we're going to close on time, we have the product base. And that might be more true for you than the other guy, but everyone's saying the same thing. And so how can you get in front of those people with something that's truly different and unique? And take that back to what is a home buyer? What's the consumer most afraid about in the mortgage process? It's this big, hairy monster that nobody understands. They hear about all of the nightmare stories from bad lenders, and they think it's this impossible mountain to climb. And so what we've got to do is take something, that by regulation isn't easy and make it easy. And that's our unique value approach. And that's where you can leverage Floify. And, some quick notes I'm just kind of looking that I took as, Raven and John were talking, that I see as traditional fall downs is that people don't use the system the whole way. I talk to loan officer teams and they use Floify up to the point that the loan's underwritten. Why would you stop there? You've got this great tool, use it completely, because the consumer already knows that ecosystem. It's comfortable for them. If you're not sending out your application invitations through Floify, do that. That's something that my team, was a late adopter on it, and now doing it, you look back and go, why? Because then the system does the follow-up for you. Hey, are you still working on your application? And take the system apart and don't be afraid to make, little tweaks and changes. Like John and Raven were both saying, the user by user customization is super critical. Like a great example, we just changed the scripting on how we asked for the account check validation a couple months ago, and we're getting a much higher adoption rate. We literally changed a couple of words so that it appeared different to the consumer. So, when volumes do fade and you have time, take those things, apart. It does reduce your app to close, and then look at how to make it, sexy or shinier. We've integrated videos in a lot of our, communication, and that kind of gives a higher touch. So when you're going to a referral partner, you can say, the reason you want to use me as a lender is because our process is different. Let me put you in the chair of the consumer and show you what they see. Who in the competitive space can you say is also doing this? And this goes back to what Nick says, we're communicating at a higher, better level, and everyone's saying, gosh, I've got this time. Use the tech to gain more time, because now more than ever, you need that time to be out there finding, new channels of business, new people to do business with, and having deeper conversations with your existing base of people to continue to hold on and retain that business and grow. And so, that would be my advice to everybody is use it completely. Don't use it part way, and you'll increase your success.
Well said. Well said. There's so much software that is only used 10% of the time when it could be used 100%, and to get that full value. Well said, James. Thank you. All right, we are going to turn it over to some audience Q&A, and we had a few of the questions come up. So I think if you guys, on the audience side, if you do have some questions that you'd like to know, let us know. A couple that have come up already. With the pressure to cut costs, how do you justify costs for systems to your internal stakeholders? So that's kind of one question. And that might be for Raven and John, or it might be for Nick and James, but how do you make the argument internally to invest in automations and systems so that you can spend more time in higher value tasks, building relationships externally?
That's hard, right? I mean, you have to come up with an ROI calculator. You know, what is the problem costing us now? How will the system fix this? And how much money are we going to save? You have to quantify it based on touches, minutes, what that staff costs you, what that task costs you, how many more loans you can do if you did it this way, how many days you can shave off. And that's where like your business intelligence really comes in, because then you can really track and see the full effect of implementation, assuming you get there. But calculating the ROI and really quantifying that data is key.
Great. Good answer. Right. John, anything to add on that?
I would say ROI is how you do it. And, you know, she touched on the minutes there. Activity-based costing, if you're not familiar with that method of kind of itemizing the steps of a process, putting the time per minute it costs, you don't realize a lot of times how much something's actually taking, you know, to do it, especially go back to my bot example of breaking things down. You can find out where those big chunks of minutes are, and then you can, you know, put those in your crosshairs and attack them. And that's where the ROI comes from is, you may not save all the minutes, but if you could save 5 of the 7 or 1 of the 2 or whatever, then you can, you know, start piecing together a business case with that information.
That's great. We have another question that came in, and it relates to a topic earlier in the session. Question is, can you repeat the home ownership comment on best avenue with inflation? How did that get set again or positioned again?
On that topic, I just said that the ultimate hedge against inflation is home ownership. So the idea is that if you're looking to invest money, if you hold it in cash, you're losing to the inflation rate. If you put it in stocks and bonds, those are going down. Crypto's going down. Home value appreciation has outpaced inflation in pretty much every decade in history. So it's one of those safe investments that we can do. And if you look at all the historical charts, home values tend to stay flat or go up during every recession in history, minus 08, which was obviously caused by bad lending practices and things like that, as we all know. But if you look at every other recession in history, home prices have gone up. So it's like that's the message that should be going out, is that if you want to protect yourself from inflation or looking for a way to invest, real estate's always the safest answer in this kind of economy.
And that's even further true with investment property. You know, if you're looking at people sitting on stock portfolios, okay, you've already lost, you know, X percent. The beauty of owning investment real estate is in an inflationary market, rent goes up with everything else. So you're hedging again, back to what Nick said. So there's 2 layers of that conversation. And again, it just lets you position yourself as a resource. You know, they call the next loan officer on their list, and who's going to give them that advice? Probably no one. So they're going to see more value in what you're telling them because you're giving them usable, helpful information.
And speaking of that, there's another question that came in around, so Angela's asking, one of you said, educate consumers. I'm on the business development side. How can you approach the consumer and not sound desperate and simply say, I am here for your future decisions?
I mean, I'll take that one if nobody else wants to jump in. I think the biggest thing that you can do is first try to figure out what the consumer is apprehensive or scared of, right? And then approach your marketing from that standpoint. You know, hey, are you afraid that rising interest rates have priced you out of the market? And then educate them around rising interest rates usually balance pricing. So you're not going to see, you know, the price increases, the competitive bidding situation, that even still rates are historically low. You know, you just look at places to educate people, and you find that by identifying their fears. What are you afraid of? And if you don't know, I mean, that's a favorite question I ask home buyers all the time. What scares you most about the home buying process? Because then you know what's important to them about it, right? So find out, no matter who your target is, what they're afraid of, because that's where you're going to earn your value and build the rapport with the consumer.
And that's exactly what I would have said too, is you want to make an emotional and empathetic partner, an emotional, empathetic relationship. You know, no one else is caring about your customer, right? So again, like just like you said, find out what they're afraid of, find their top worries, and combat them.
Yeah. And if you're truly looking to educate someone and coming at it from that perspective, you'll never come off as desperate. Like if you're just educating someone and not selling something, it's not going to come off desperate.
Well said. Again, providing value. Somewhat related question. What do you see as the biggest drivers of growth in your space over the next 2 to 3 years? What will you need to do differently now in this market than what you've done in the past?
Exactly that. Educate, use more tools and show more numbers. And maybe you don't have a numbers based person, and that's where you need to go more emotional. Disc testing, you can't disc test your customers, right? But when you know what their personality is and what's important to them, that's where you can focus. And maybe I missed the goal of that question, and maybe it was more technology based, but I think if we're talking about customers along those same lines, I think it's education and data.
Well, and I think that, the one reality we're going to see in every side of the business that's going to be a builder, ironically, for the people who stay in the business is attrition. So we're going to see people in both mortgage and real estate get out of the business. There's opportunity there. And again, there's opportunity just to, look for new resources. One thing, that a lot of lenders have started doing is looking to, other lenders for referral, whether that's across state or product you don't offer. I think that creativity and the ability to change, back to what I said earlier, is really going to be what gets it. That's about educating people about what you do and how you do it, but also looking for, a new audience to share that information with.
And that's a great point, given the reverse urbanization that we're seeing in some of these micro markets popping up in the South, that referral lender to lender. That's an interesting angle, James. It's great. Anything else to add?
The one thing that I've been thinking about lately, and obviously it's not just a super snap of a finger, but people are going to need funds or tap into their equity, but they don't want to touch their first liens. So I think, maybe if you're not in the HELOC market, it might be a good time to look at that.
That is a very good point. All right, I think we've got a few product related questions in the chat that we'll answer directly and as part of the email follow up. For example, how to embed video. James brought that up, which is a really great point. But I think we are nearing time, and so what we will do is I am also sharing a couple of other polls or actions, which is if you would like a demo or to sign up for the 2 offers that we have around the 14 months for 12 months of Floify, or if you would also like to schedule a 15-minute strategy session, you can sign up here or through the link floify.com/growth. And I would like to thank all of our guests and presenters today. We got some great engagement and insights. I really appreciate your time that you've taken to be with us today, and I appreciate your partnership with Floify. Thank you so much. Have a great rest of your week.
Thanks. Bye.
Thanks, guys.
Thank you. Bye-bye.
Thanks, everyone.